wild price action as Jay Powell speaks at the New York today, and minus 942.50 are the hypotheticals. We didn't trade today. We're waiting for a bigger drawdown. We briefly breached into the $10,000 drawdown intraday very quickly. You could have phased in there. We're looking for a good way to get in on a $10,000 to $12,000 drawdown intraday or end of day. That is it's easier to implement it. Sometimes when the market is moving, it's difficult to implement. But there was a brief opportunity today, and we are still waiting for that right opportunity to get in on a drawdown. And let's look at the results on the month. So the results coming into today were plus 26.95. That is if we don't trade on FOMC, and it's a little higher if you trade on FOMC. Let's look at that. If you trade on FOMC, your overall returns go down 7,003% versus 7,032. Your drawdown's a little higher, so we just use that as an opportunity to not trade since it improves the results. And the monthly results, let's look at what the monthly results would be without, or if you traded on FOMC. It would be, the monthly results would be 75.30 coming into today. And so we are not trading, so it's plus 20, I guess we said plus 2,800. And after today, it's about plus 2,000. So we're waiting for a drawdown, another $4,000 in drawdown. Would put us there. It'd put the portfolio down 2,000, down 2,000 on the month, and in a good drawdown point to get in. And so we're looking for that potentially. Today the market went pretty wild. You can see that here in this NASDAQ chart. Jay Powell spoke at around 1240, and the market rallied here, and then it took out the lows. The NASDAQ took out the lows of the day. Then it turned around, took out the highs, and then it retreated. So it's one of those days where it just looks like stop running is happening. What happens in this environment is that the market moves like this on a very small scale. But when the market participants decide they're not going to trade, the market makers don't. There's not as much market making going on. The liquidity in the order book dries up a little bit. This price action right here expands to this type of price action. And so that's why you see when Jay Powell speaks, the market does this, because it's an expanded version of what it does on a very micro level when there's more liquidity. And so when less liquidity is in the market, then it just expands. And so that's what happened today. And let's see, tick pullback right around break even. Viper hit equity peaks yesterday, and then took a short loser, a long loser, and then tick pullback, a long loser, and then tick reversal did really well. Trades of the day were the tick reversal trades. Those are at equity peaks. Tick reversal, there's an equity peak there. Tick reversal 2022 working towards an equity peak, and EVP1 down on the day, had the initial trade, market rolled over. Momentum reversal, lost on the long, lost on the short. Just a wild day. The strategies were up about 14K, and then it rolled over, went to a drawdown for the day, and then bounced back a little bit down, ending up down about 1,000 on the day. So momentum reversal, EVP1. So those are the NASDAQ trades on the day. S&P mirror was up on the day on the long side at its profit target. Tick fader hit its profit target. Momentum reversal, same thing. Lost on the long side, lost on the short side, and then tick wave got hit pretty hard. It took 3 short trades. Tried to go short, stopped out. Tried to go short, stopped out. Tried to go short, stopped out. There's a lot of short fighting. That continues to persist in this market. There's just a strong, I guess, emotional response between bulls and bears right now. Just a very, almost a spiteful nature towards anyone that tries to sell or short the market. That continues to remain because the excess liquidity gives the advantage to those that want to fight the shorts. And so when that liquidity is balanced out, it'll be a more even market, and the shorts will be able to have more profitable trades than what we've seen right now. It's been imbalanced because the hand of the bulls has been enhanced by the excess liquidity, and so just unusual times to see this amount of imbalance. But that's where we are, and the strategies did relatively well today considering this kind of price action, and tick reversal did really well. We enjoyed taking those long trades, or seeing those long trade signals, and tick reversal 2023 making equity peaks. So we did not trade once again today. So these are hypothetical results. 61.70 drawdown. We went on a strong winning streak, and the last 2 days have been down days. And so waiting for an intraday drawdown. Look for about $4,000 per E-mini to draw down intraday to try to get in if the market's not moving too fast, or an end of day of 4,000 or more. 4 to 6 ideal. So those are the trades on the day for Tuesday, February the 7th, 2023.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.